Our job is to own the top companies in the US so that they can work for us. So to tie back into what he talked about, everybody type in chat, equity owner. So there's two ways we can play the game. We can finance the companies and they can pay us back that way, the bond market, or we can own part of these companies. Shout out to my guy, Huggy Bear. You got a dope Instagram name. But look what he said. Like, I have money in a savings account getting 0.3% interest, but if you would have put away 300 a month for 10 years or even 5 years, and that mentor was not me, he'd be sitting on 250. The thing about behavioral finance, as many of you know, is not about the information. You know, VTI, VGT, VOO, SPY, QQQ, XLK, Apple, Microsoft, NVIDIA, AMD, sales, great. But are you executing and buying that shit every month? Or as Trap will say, load the clips, and if it gets to a deep enough point to put all of your money in at that particular position. But we want the companies to work for us, right? Like, even coming back today, Monday, I'm like, whew, it's working 12 hours a day thing. Oh man, I'm gonna have to wrap this up soon. And I love what I do, right? So the formula, keep it very simple. 2 index funds and 2 tech companies. Really simple. But look at this. So since return, so kudos to John, kudos to Hans. But look at, and this is during a golden era. So timing in the market and keeping your money in is key. And because a lot of you have been asking me, Rashad, Troy, Trap, like, when do you get out? I'm like, if you get into a great company, you do not want to exit. But it's something that has not been taught in our culture to hold businesses for a long period of time. I understand the layers of why. Some of us may not even think that we may make it to 25. So there's no reason to hold for 20 years. I'll dive into that later. But since this golden era, Microsoft, Adobe, Amazon, Apple, look how well they have done. I don't know about you, but I wish when I was playing above the rim every day at my grandma's house, trying to get my handles together, I wish I would have known to buy Nike back then with the money that I was getting buying and playing NBA Jam. I didn't know. So this is part of the reason why we come here and share this information every single week. Look at this. Just over 10 years. Now, for those of you that are 24, 25, I see some of y'all on IG. You think that them 30s not gonna creep up on you. I was the same way. Oh, baby, you hit 30, life changes. You have a kid, get married. Oh, baby, you like, dang, all your references get old. You like, dang, Will Smith looking like Uncle Phil.
Yo, talk to him. Talk to him, man.
Yeah, it happens. Kudos to Will. I love you, my brother. But look at, so for those of you who need a scholarship, screenshot this list. These are still quality picks. Tesla up 8,000%. NVIDIA, 3,700. A few of you have asked me which ones do I think is going to hit the 1,000% club. Alpha, Michael, David will be there soon, right? But these are all quality companies. This is all you need. But when a recession hits, and for those of you, if this is your first recession, I'm going to talk to you about it tonight, but I need you to begin planning what you're going to do in the next recession. But all of the biggest winners over the last 10 years, with the exception of one, is a tech company, including Domino's, which we talked about here as well. So you got 4 tiers of investing. We talked about it. Index funds, that's your first entry level. Kudos to Jeremy. So we agree on that. That's your first tier. Second tier, tech. Then you want to get into the volatile stuff. So let's say a Tesla, even like you can categorize Boeing, the cruise lines, because of how long it's going to take them to turn and the catalyst that they need from Fed, plus customers feeling comfortable, the volatility of them going up and then sliding back down 30 to 40%, that makes them volatile. And then you have futures and exotics, and I'll include futures, exotics, options all in the same basket. That's the last thing you need to do. Now, I know you don't want to hear it, right? But if you have a little money, and I didn't want to hear it, so I get it. I was you. But if you have a little bit of money, the little bit that you have will grow a lot safer if you put it into these safe vehicles. Because if you don't have enough, I'm going to be very honest, a lot of not having money is behavioral finance stuff that you have to learn how to break. So even in not over trading, everybody who trades technically knows how to trade. most people who trade just don't know how to stop. So I want you to put in chat safety first, right? And then when I said it, when we start getting on here, I'm like, if I ever think that the market is going to crash, I'm going to come to you and be like, man, it's over. No, and I'll tell you the reason why. I'll say, and even when Rashad and I was talking in March and we was talking about Boeing, he like, bro, you sure? I'm like, trust me, I'm sure. I'm not going to end our relationship over a bad call. 2 weeks in, I got you. I was like, Boeing 95, 97, 100, we're good. So if it ever comes to a point where I think that the market is going to fall, and maybe mid-30s we could, I'll say that. And we've also talked about tech crossing over into healthcare. So I put this in May, and Amazon, of course, announced that they're going into the pharmacy business, because if they have a distribution center and they have all of this intel and all of this data, they can run those analytics and see, okay, great, that is the next sweet spot that we need to cross over into, because they could potentially dominate that space. And because healthcare is not incredibly efficient, you leave room for competitive threats to loom and enter your space. So for those of you that are business owners, one of the things that you must do consistently every week is you need to figure a way to put yourself out of business, or if someone came new into your territory, what would scare the hell out of you? The healthcare field is not innovated in a long time. But my question is, who are you building this for? That's my reason why I work so hard. And that's why I be agitated, sleeping 2 hours a day. And I promise you I'm doing better. But I want you to put in chat, who are you building this for? When I didn't have any money, when I used to hear people say, well, man, when you get the money, it won't matter. And I was like, bro, shut up, give me the money. It shouldn't matter. And then you get $1 or $2 and you're like, it really doesn't matter. Like, the respect of the community matters more to me. My family being proud, like me having solid relationships and helping matters. Like Xander being proud of me matters more. But who are you building this for? Because I'm going to be real. A lot of the times we're trading because we want to flex for us. But when you have somebody that you care about and you want to make sure that they're straight, you're going to think long-term for them. I'm going to be real. Other coaches are thinking 4 or 5 legacies down, 4 or 5 generations down, excuse me. Who are you doing this for? And then that takes away all the competitive ego jockeying that we see away as well. Because when you're actually building for your grandma, your auntie, your dad, your kids, there's so much love that pours out of you. You're not going to enter in a bunch of conflicts. And also, you're not going to engage in a bunch of risky trades either. So kudos to all my parents, especially for those of you that are homeschooling, and my teachers. You guys deserve a raise, for real.
Amen.
But here's the truth. Okay. Listen close. Almost everything that's ever been stated about investing has been written already. You don't need to learn nothing new. Like, even when some of you are asking, where do I get out? I'm like, if you read Money Master the Game, the book that I don't get any feedback for, can y'all go tag Tony and tell him to come on the show? I know I had to move up 200,000 books for him.
Easy.
And the book has been great to me, so I'm honored to be able to share, right? But everything has been written about investing. You don't need to learn anything else unless you just started yesterday. Truth be told, 5 years is a short period to invest. We really need to be holding 30 years. But I know if I came out the gate and said 30, you would be like, get out of here. Rashad, get him off the show. Right? Who he think he is with his jacket and hoop shorts telling me to hold a position for 30 years. Get him off, right? Everything's been written. But to overcome the fear, start small.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.